Based on market trends and the interest rates still as low as they are, I don't see this slowing up at any time. Hey guys, Sean Bloomquist, Pine Financial Group. We work together so you succeed. If you're watching us here on YouTube, make sure to subscribe to the channel, hit the notification bell so you're up to date on all the videos are released every Friday. Today, I want to talk to you about the 2021 fall market and just give you kind of an update. It's mostly going to be for the Twin Cities Metro, but this is essentially the same scenario nationwide, but the statistics I'll give you are just a little more localized to the market that I'm in. As of right now, according to an article I just read the other day, the Twin Cities market of the 56 largest metros in the nation is the most difficult market in the nation right now in terms of availability of housing, demand for the housing, and just the ability to pick up houses right now. It's a crazy time right now, market-wise across the nation. Values are skyrocketing still. Availability is at a ridiculous amount, all-time high, and inventory is at an all-time low in many places. So that is creating quite an issue for people buying and selling. Great time to sell. You can get rid of houses almost immediately, put them on the market, and you'll have multiple offers within days, maybe even the same day, for more than asking price. The average right now in the Twin Cities market, houses are going for 102% of asking value. So that tells you that they're getting into bidding wars, and it's happening within 2 to 3 days. You put it on a Friday, it's sold by Sunday. I mean, that isn't out of the ordinary across the entire nation. Even the hot markets like Denver and LA and things like that, they're seeing the same things, but per capita, we are actually in a more dire situation right now. An interesting statistics I just read as well in this article said that in the next 5 years, they estimate will be 40,000 units short of demand. So that equates to apartments and single family houses and multifamily will be 40,000 living spaces short of the demand that's going to be needed for the metro as it keeps growing. That is putting a lot of stress on builders, and builders are having trouble keeping up because of a few issues. You've got the delays in supply chain from all the COVID stuff that happened last year and the start of this year. You're also having trouble finding employees to work for these construction companies to get things built on a rapid basis. The trades are struggling to find people right now. So that's just trickling down and making things harder and harder for them to keep up with this demand. The crazy thing that is also happening with this housing crisis that we're in, you've got people looking for houses to buy, everything else like that. It's also translating over into the rental market because now people are, maybe they're selling their house and they haven't found a house to buy yet because maybe they've been outbid on multiple properties that they've tried to buy. So now instead of having a home to move into, they're having to find a place to rent until they can find that property to buy and move into. So rental is even higher demand right now than it's ever been. And rental rates are skyrocketing as well. They've gone up over 11% for rental rates. So that's great for landlords. Now with all the moratoriums that have been lifted, you aren't going to have as many issues as you had last year with tenants not paying rent and causing issues for you on your mortgage side. Now you've got an extremely high demand for rental property. So people are needing to find places to move into in the interim when they're trying to find a property to buy and live in. So what does all this mean as investors? Is that going to make it harder for us to find properties? Is that going to make it harder for us to buy properties? Yeah, it's going to make it a little tougher for you to buy properties because the values keep going up. One of the biggest shortfalls in this housing crisis is starter home properties. So you've got a lot of higher value properties, and with the values going up, it's making it harder and harder for people to buy a starter home. So as investors, we should be going out and looking for these vacant properties that have been in foreclosure or bank owned as of right now. Get these properties under contract, get them turned around with flip, put them at market rate. And even if they're starter homes, maybe only $200,000, $250,000, which is crazy to say that's a starter home right now, but that is in most markets, if not even higher in some markets. Those homes are going to go like wildfire because people need these starter home prices values. The other great thing is if you don't want to do flips and you want to do these rental properties, boy, this is as good a time as any to buy them. I mean, we've been saying for years that rental is a great thing to buy right now, and that the window would be closing. The window probably is closing, without a major notice. But right now, you can still have rental properties, even with these values going up, they're going to cash flow because the rental rates have gone up and demand is just crazy right now. So great time to still buy rental property if you want to do that. So with that said, based on market trends and the interest rates still as low as they are, I don't see this slowing up at any time. The housing crisis and demand is going to be going good for quite a while, where people are going to be needing these properties and they're not going to have the availability for them. So make sure you stick to it, keep out there, find some deals. If you have any questions on flips, rentals, even new development, if you're looking to build properties, maybe multifamily, something like that, please reach out to us, pinefinancialgroup.com. Thank you.